Alright, so guys, Jeff here. Today is a Thursday, and we're going to be going through some of the FOMC meeting minutes for January. So do note that these are the minutes that actually will be going through the FOMC meeting that happened in the 25th to 26th meeting of January. Okay, so of course, this were actually things that have already been said and done. It doesn't really affect the market as much. However, as compared to what we actually had in December, it was actually way worse because what was actually said in December, there was a lot of bearish catalysts for us to actually look out for. As compared to what we have in the January one, it's actually a lot better than I expected. So over here, these are just some of the things that I am personally looking at. Okay, so inflation reading remained high, which we all already expected over here. Okay, and the inflationary pressure broadened over the second half of 2021, 5.7% over the 12 months ending in November. Many consumer food prices was 4.7%. Okay, I'm just going to do this pen over here so it's easy for you guys to see where I'm at. So yeah, 1% point higher than its year earlier rate of increase. Okay, so where it actually kind of changed a little bit is that pointed to a decline in December, possibly reflecting the sharp rise in COVID-19 cases in the second half of that month, as well as some holiday sales that has been put forward to earlier months. Residential investments increased in the fourth quarter, however, shortage of construction materials, buildable lots, and other inputs continue to weigh on activity in this sector. So something for you guys to actually really take into consideration is the notes I actually wrote over here, which is not reflected on the CPI, because for residential investments and your rental income and such, all these are actually not shown into the CPI itself. You only get your consumer-esque prices, such as your food prices, your apparel prices, your energy prices, and such. You don't get residential prices or all the investments into the CPI itself, which is kind of weird, which is why a lot of people think that CPI is pretty flawed. But at the same time, because of how it is as a system that all of us actually look at it, we just kind of follow through it. Business fixed investment appeared to post only a small gain in the fourth quarter, which of course we kind of expected that as well. And I think that what we're actually more afraid of is the supply bottleneck and the limited supplies of construction. Okay, yeah, over here the supply bottleneck and also the limited supplies of construction material restrain non-residential structures investment. Okay, so the total real government purchases appeared to have fallen in the fourth quarter. So although available data suggested that in the real federal purchase rose, indicators of the real estate and local government purchases pointed to a decline in the fourth quarter, despite state and local government extremely strong budget position and the widespread return to in-person schooling last fall. So this actually goes back to the balance sheet that we actually was talking about, and how if the balance sheet we are expecting them to actually have a lot more to be spending. We expect the government to be spending a lot more, but of course they did say that they are going to be doing a cleanup on the balance sheet. We are expecting things to actually go back down, and of course do understand that whatever I'm going to be talking on about here in this entire meeting minutes, honestly speaking, you don't have to worry too much about it because let's be honest, these minutes did not really crash the market. It did not really help the market that much, but it didn't crash the market. But I'll be going through a news later on, so just stay with me for a little bit. But anyway, market-based financing condition remain accommodative, and banks' lending standard ease for most loan categories. So I'm pretty sure that we already know that for all the banks in the world, usually during this sort of like pandemic or like war sort of situation, what happened is that the banks are actually able to lower the amount of money they're supposed to have, and they can still allow more spending and more borrowing to other be it your corporate businesses, and also people that need the money. Okay, a lot of time the banks are actually being put on lock because they are not allowed to borrow, they're not allowed to lend out too much money, or not they do not have enough collateral on their bank itself. But yeah, because of this, markets in general remain accommodative, and that's why this is very, very important when we say that the market is still remaining accommodative. Purchasing Managers Indexes, which is the PMI, improved supplier delivery times. Foreign vehicle production rose. Supply bottleneck continued to ease somewhat. However, the rapid spread of Omicron variant led to renewed public restriction in several countries, weighing on the activity of at the start of the year. Inflation continued to rise, and this is mostly driven by further increases in your retail energy prices, your supply bottlenecks, and also your EMEs and rising food prices. So things that we are all already very, very well aware of. So I think that what was actually very, very good about this entire report is that the Federal Reserve, they're not trying to like BS us, okay? They are actually very, very transparent with us, okay? They kind of want us to know that like everything is going to be all right. And I think because of that, we are not so worried. Okay, so by anyway, I'm actually almost done with this entire report. Honestly speaking, I don't see anything that was very, very huge. I did see about the staff economic outlook of things, which they actually talk about the GDP, and they think that the GDP is gonna be expected to slow down noticeably in the first quarter of 2022. But honestly speaking, I think we are all very, very well aware of that. So I don't think this is something that I need to report on. But anyway, that's for the minutes of thing. But now let's cover some news today. All right. So let's go over to the Wall Street Journal. Let me just keep my iPad for a little bit. All right. All right. The Ukraine pro-Russia separatist trade allegation of the ceasefire violation. So for people who are unaware, we thought that Russia was retracting their troops away from Ukraine. However, to our surprise, that didn't happen. If anything, Russia actually added 7,000 troops into Ukraine, and most likely this standoff is going to last longer than we actually expected, which is why markets kind of was kind of dwindling down a little bit. Market is still very, very uncertain with what they want to do, which is exactly what I've been telling you guys for the longest time as well. When this kind of thing happens, we do not know how and what we should react with. And because that, I am not willing to do anything. I'm not going to sell. I'm not going to buy. I'm just going to hold on to it first. Of course, I'm going to be destroyed in the short term because I have a lot of options that are going to be expiring in the next few weeks. And because of me not doing anything, I'm probably going to get destroyed on the theta decay on all those options as well. But I think that would make a lot more sense for me to just not do anything rather than I just panic sell and then realize a lot of losses. But anyway, Ukraine. Okay, so I read over this entire thing. Basically, they're just talking about how the ceasefire is not happening so soon, and I think like we kind of, like I said before. Okay, guys, I already told you guys about it. You guys should have been expecting that anyway. All right, Nvidia posts record sales amid broad chip demand. Okay, the thing is that we actually expected Nvidia to do really, really well. Let me just check what Nvidia is right now, because yesterday after the earnings report that just came out, they kind of go up a little bit by like 3% or 4%, and then afterwards they just kind of bounce it all the way back down to like 3%, and then they kind of just stable back. And right now in the pre-market they're down 3%. So I'm not going to be super duper excited about Nvidia. Of course, I did name Nvidia as one of the companies that I'm very, very interested in 2022, but of course, this is also due to the fact that they have the failed M&A deal, which is the merger and acquisition deal for the semiconductor ARM, which ultimately SoftBank said that they are going to be doing some sort of IPO for ARM on their own. Okay, so it generated 7.64 billion in sales, and in most recent quarter, up 53% from the year ago period. It's reported $3 billion in net income, more than double the prior year's figure, beating Wall Street expectation both on profit and sales. So it's kind of weird because, like I said before, the earnings in this season is a lot weirder than what we are more used to, because you have to really destroy on your earnings, not just beat the estimate by the street. The street put up an estimate, but chances are you have to destroy those estimates for you to even make any form of money. Otherwise, you're not going to be making any kind of money, which is why all these kind of companies, despite having good sales, a good revenue, even good forecasts, and if they're just meeting them halfway, you're not getting much. And that's why I think that that's kind of how the whole overpriced market is like at the moment. People think that a lot of companies right now is very very overpriced. Similar to how Roblox was actually. Roblox is still at about the $53 region, which I'm not gonna lie to you. Roblox looks super duper good. Like I'm so tempted to buy into Roblox right now. Palantir also reported their earnings earlier, like I think in the last hour or so. I did look at their numbers a little bit disappointing, but still, it went down by 11%, and right now it's kind of just bouncing around these -7% or so. I'm not gonna be super duper positive about it. We'll see how it goes. But okay, anyway, the U.S. retail sales jumped 3.8% as shoppers shrug off high inflation. And this was actually reported yesterday anyway, or something along the line, where we actually talk about how the retail sales and people are still having enough money to kind of keep on paying despite high inflation. We actually talk a little bit more about the whole wage price spiral as well. So if you're interested, just watch the news covering from yesterday, and you guys will see more of my opinions there. All right, Biden orders archives to release Trump White House visitor logs to January 6th panel. So this is basically the Capitol saga that is still yet to be finished. President Biden is directing the National Archives to release White House visitor logs to a House panel investigating the January 6th attack on the U.S. Capitol, dismissing former President Donald Trump's request to shield the information under executive privilege. So what happened here is that Donald Trump basically wanted to use the executive privilege, saying that because of the position that he was at the time, he's able to kind of just say that for the freedom of rights to the knowledge itself, you are not allowed to disclose all this information. And of course, President Biden is trying to override that command and see how it goes. But yeah, honestly speaking, I think that this whole saga is quite boring because I just feel they're just two old men trying to fight. And Trump is being a little baby about it. He lost. He should just accept defeat. And Biden is also being a little baby because he won, and he's still trying to tarnish Donald Trump's name as a form of the reason why he's such a great president is because Donald Trump is not a president anymore, that kind of thing. It's just child's play, if anything. But anyway, okay, as oil nears $100, Saudi snub US stick to Russian pack amid Ukraine crisis. That's a load for a statement. But anyway, oil prices is definitely going up as well. Let me see. Let me find the WTI prices. The WTI prices, it kind of went down a little bit. But I'm pretty sure that after we had the news on the Russian, so this sudden rise back up here, this was due to the fact that Russia has not really went for a ceasefire, and because of that, we see this sort of increase over on that side. Rising oil prices and fears of a Russian invasion on Ukraine have created a dilemma for Saudi Arabia. Help the West by pumping more crude to tame the market, or stand by a 5-year-old oil alliance that is helping Moscow at the expense of Washington. I think this is more of a political view on both sides as well. But I think instead of going with a political view, I think my stand is still the same. With rising oil prices, it's just going to be affecting inflation. I don't really care about the politics side of things. I think ultimately politics stuff are just very very boring. I do read up on them just for myself to have an informed position and information on my own. But I do want to think of it from a more subjective point of view. And because for rising oil prices, basically you are just going to be affected by the inflation because oil is going to be reflected on your CPI, and that's going to be considered as your consumer pricing. And with oil continuously going up to your $100 and even $120 for some of the Goldman Sachs analysts who are actually looking at how this might actually go to, if you're getting $120 per barrel according to the WTI or the Brent oil index, we're gonna get destroyed. And I think that inflation is not gonna slow down, because if we keep on having this sort of pricing volatility on just oil alone, we're going to see the same thing as how we actually saw back in your July, August, and September, where we had all the high volatility in the CPI due to your used trucks and your used cars. And I think that's going to be the situation that we'll be having in the very, very near future, which is why I'm very, very worried. Russia is continuing to build up forces near Ukraine, the NATO chief said. So we actually went through this yesterday on CNBC. I think I actually explained a lot of my stance there as it is. But of course, this is new information, which is from the additional troops that Putin actually called out to be placed at the Ukraine borders. So yeah, I'm pretty sure that they're still talking about the military drills in Belarus. But yeah, I think this is a very, very long article that I probably already went through anyway. So, U.S. Russian aircraft flew perilously close to each other amid Ukraine tensions. So I actually talked about this as well. Well, okay, I didn't really talk about it. I actually took a picture and posted it on Instagram, and I thought that this is horrible. And if you're not following me on Instagram, which is going to be way more horrible, follow me right here at Hauser for daily news update. Of course, subscribe to my channel. I do post almost every single day, essentially. Because U.S. Russian aircraft flew perilously close to each other amid Ukraine tensions. Okay, so the aircraft operating in the Mediterranean Sea flew dangerously close to each other. 3 separate incidents over the weekend, including one in which the two nations' aircraft came within 5 feet of each other. Okay, do you know what 5 feet is? This is 5 feet. I think like about this. This should be this might be like 4 feet maybe. Like this is 4 to 5 feet. They were this close. Okay, it's horrible. So like I don't know how to tell you guys. Okay, it's horrible. The incident, which occurred in international airspace Friday and Saturday, involved 3 Russian Su-35 jet fighters crossing in the flight path of 3 U.S. P-8A surveillance aircraft, the official said, and come amid heightened tensions between the U.S. and Russia over Ukraine. Like I said, this is going to be another whole Afghanistan situation all over again, and I think that this is just what U.S. likes to do, I guess. But of course, this is just a very, very short news. It's just that this is not something nice. Of course, when you do read something like this, it's not like information packed, but at the same time, okay, you do want to be worried or concerned to a certain extent. Okay, Google plans to curtail cross-app tracking on Android phones. Okay, if you guys do not understand what this actually entails, this basically is scaring the bejesus out of all your social apps. Because when Apple did it, Facebook died, Twitter died, Snapchat died, whatever. As long as you're a social platform, you are getting destroyed. Okay, and because what Google is going to be doing here is basically what Apple did. Okay, it's going to be a privacy restriction on the platform itself. So Google plans to adopt new privacy restriction to curtail tracking across apps on Android smartphone, following Apple inputting restraints on its advertising industry that has covertly collected data across billions of mobile devices. So Google's plan for Android could hasten an end to more than a decade of advertising practices across smartphones, in which companies, including Meta platforms, Facebook, layered their code into hundreds of thousands of apps to track consumer behavior. And yeah, this is why. Okay, I'm telling you right now, Meta platform is going to get destroyed. Meta platform is going to get destroyed. Think about it this way. Apple destroyed Meta platforms after the whole privacy situation. Meta platform came out with a horrible earnings report and forecast and everything. And then let's not forget that also Meta platforms is wasting a lot of money on the metaverse, and it's not working out yet. Okay. And now with this, it just feels like there's like never-ending steps at Meta platforms. Of course, this would also hurt Snapchat a little bit, which is why I already have my covered calls on Snapchat. which I'm actually quite happy with. But yeah, I do tell you guys all my plays anyway. So I mean, yeah. So Apple changes which went into the effect last year have already unpended. I mean, depended the digital ad industry and contributed to wipeout of more than $300 billion from Meta market value. Google said Wednesday that it plans to develop more privacy-focused replacement for the alphanumeric identifiers associated with the individual smartphones that some apps use to gather and some information and share information about users. Okay, so of course, this will not propel Google, aka Alphabet, to like greater heights because this kind of, if anything, this kind of shortchanged Google a little bit because it kind of makes people worry a little bit more. Of course, Google is not trying to do some sort of monopoly sort of play because with Apple and Google out there, this is a duopoly, I guess. But yeah, of course, this would probably spur some of the possible platforms to actually come out to actually create their own platforms and make it even better. Of course, I am eyeing at China's platforms because I think China has always been very, very adamant at using their own platforms instead of using the official platforms such as your Google and your Facebook and such. So yeah, I think that this might actually bring forth some new platforms in the near future. So maybe Apple and your Google might not be such household names in the next 10 to 20 years, just like how eBay and Amazon or your Pets.com in the, back then, those were considered household names in the .com bubble, and then now they're just unknown. Okay, I'm not saying eBay is unknown or anything, but yeah, Pets.com. Let's be honest. All right. Anyway, Justice Department targets spoofing and scalping in short seller investigation. So this one, I really like this news a lot. Okay, so what this news basically is going to be talking about, which I kind of briefly went through it as well. It simply means that all the short sellers and all those analysts, all those institution investor, what they basically do is, for example, if I'm an institutional investor, if I want to short Snapchat, okay, I am going to short Snapchat. I'm going to come up with 10 articles on how Snapchat's rival is better, Snapchat is bad, Snapchat's daily active user is going down, Snapchat's revenue is not good. I'm going to create so many different articles like this. And with my sort of influence in the institutional investor level, everyone's going to read it. And because of that, everyone's going to be like, oh, hold on, maybe Snapchat's not that good of a investment, and then they're just going to be like, yeah, you know what, I'm going to short Snapchat as well. And then someone who holds Snapchat is like, oh my god, did Snapchat just drop in price? Sell my Snapchat. And because of this kind of create more FOMO. Okay, well, not really FOMO, more like fear of being in. Phobia, fear of being in. So they want to get out of Snapchat, and because of that, those people who wants to short Snapchat will have FOMO, so they can go in to short Snapchat, and because of this, they kind of create a lot of so-called FUD, which is your fear, uncertainty, and doubt, into the market, especially around Snapchat, and then forces Snapchat to kind of sell off in terms of the market volume, and because of that, this is what we call a market manipulation, to say the least. But of course, as much as we can call it market manipulation, a lot of people actually continues to do this, which is every time we actually read an article about how a company is bad because of this, chances are, just try to read more articles around the companies, and chances are you're going to be cross-referring some bad notes, and you think that, oh, this guy is just blowing smoke up my ass. And I think that's going to be the issue. But of course, I'm very, very happy to see the Justice Department actually coming out to do this, because the spoofing and the scalping in the short seller industry side of things, horrible. The federal prosecutor are investigating whether short sellers conspired to drive down stock prices by sharing damaging research report ahead of time and then engaging in illegal trading tactics. So this basically already happened even before like 2018 or even before 2015 or whatever it is, because people have been doing this constantly. Okay, if you're a big company, whatever you're gonna put out is gonna be influential enough to change the market. Which is why a lot of articles, especially in your Wall Street Journal, your Bloombergs, a lot of time they will tell you this article is an opinion. Okay, and those are the people who are like the journalists who are in the company itself. They're just writing a normal opinion article, an opinionated article, which is why you should probably do your own cross reference. But those are not the ones that's dangerous. The one that are actually dangerous are the one who are the analysts who comes out to say, yeah, I don't think this company is very good. We do see that there's going to be multiple situation that will cause this company to go bankrupt and things like that. And this actually happens to a lot of different companies where they actually get this sort of ill report, this kind of false research report that get reported right after they actually started shorting the company. And I think that's going to be the situation of why people actually want to get to the bottom of this. So I'm very, very happy to see that the federal prosecutor actually getting on top of this. So yeah, hopefully we do see some sort of change in the near 1 to 2 years time. Hopefully, by like I said, to a certain extent, they will probably cannot do too much because ultimately, US is still a country of freedom. Freedom of speech is still a thing. You cannot really silence people that easily because if my opinion is that this company is bad, I'm still going to talk about how this company is bad. And just because I'm influential to a certain extent, you cannot really silence me. So yeah, I think that's going to be a little bit tough, but we'll see how the Justice Department actually hold out on this. All right, from Bloomberg side of things, I think it's kind of the same. Roblox, we actually went through this as well. Morgan Stanley, Archegos unwinding sped up trading probe. So Morgan Stanley wrote in the unraveling of the Bill Huang's family office breathed new life into the federal probe examining irregularities in a Wall Street lucrative market for block trades. All right, so for people who forgot about the Archegos arc, I'm not sure if you guys have been following me since the Archegos arc. I have been actually reporting about the entire Archegos arc since I don't even remember when the Archegos arc was actually. Like I remember reporting about it almost every single day for a week on Instagram, talking about the Archegos arc. But yeah, that was actually quite crazy. But yeah, right now they're kind of just trying to find a conclusion. I'm surprised that they have not found a conclusion. It's been quite some time. So yeah. Let's see what Morgan Stanley can do with Archegos, I guess. Let's see. Barron's. Okay, in the new blow to Facebook, Google will make it tougher to track consumer on Android. So this is what we actually talked about earlier as well. Barron's probably is going to be talking about the same thing as well. Android-based version of the existing initiative is called Privacy Sandbox, which is intended for both intended to both protect people's privacy while giving companies and developers tools to support online businesses. The move echoes the recent steps Apple has taken to reduce the ability to track user activity on iPhones. The Privacy Sandbox reduces cross-site and cross-app tracking while helping to keep online content and services free for all. But yeah, I think this is kind of what we actually read up earlier as well. But okay, you can kind of see how the price probably moved when Alphabet released that news. Meta shares were down 2.6%. After touching a new 52-week low at 212, the stock has now fallen 33% since announcing their fourth quarter financial results. And so yeah, for people, if you keep thinking that buying the dip is the absolute way to go, this is the reason why this might not be the way to go. Of course, I'm not telling you guys to time the market, which okay, basically I am to a certain extent, but buying the dip consistently is not gonna work out. As much as I like to buy the dip as well, but the market doesn't really reward you for buying the dip. That's kind of how the market is right now. Unless you're buying the dip on index funds, and then you'll be doing great. But if you're buying the dip on individual stocks, chances are it's gonna keep on dipping and keep on dipping. And even if you think that this company is gonna be great 10 years from now, 20 years from now, there's also your own level of speculation. It's not like this is not an industry-wide speculation that this is a good company that will be around in 20 years. And those companies who have the entire industry actually speculating in the same directions, probably are already in the trillion cappers as it is. So yeah, I think that's gonna be the issue. You see, if the stock dropped 33% since announcing their fourth quarter financial results, when they first announced the earnings report for Facebook, I think about 3 weeks back, they dropped about 25%, and from there they kept on dropping to the point where they hit $212, which is quite crazy for us to actually think about Facebook at such a cheap price. Among other ad supported social networking companies, Snapchat dropped 3%, Twitter down 3%, Pinterest down 1%. And like I said, the reason why I do want to hedge against my own position as well is because of things like that. Okay, I do have a lot of Snapchat and I sold covered calls. Of course, I'm telling you right now, okay, 100% transparency, and of course, I do want you guys to know that writing contracts is very, 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 very dangerous. Okay, but I'm doing this because I have covered stocks. Okay, I have underlying stocks that is going to be connected to the calls contracts that I'm going to be writing up. And because if I'm the one writing this contract with underlying stocks, the worst thing that can happen is me losing the stock, which I'm completely fine with because the things that I want to sell the stock at the underlying price. Of course, this is all very, very complicated to a certain extent if you have never ever touched options or even heard about options. But yeah, I'll probably be doing some content on options so that some people, I do remember some of you who are asking me about options content on my Instagram. But I am quite busy on this, but I'll try to get some options content on YouTube as well. Anyway, I think that's all I have for today. The news is actually spreading out too long because right now it's almost 30. Well, it's almost 32 minutes. But anyway, thank you guys for watching, and I'll see you guys